Is Grayscale the company that will send Bitcoin to 9K if it goes under? In this series, I'm going to explore the exact complex but extremely important question. Now, there's some sketchy stuff going on in the financial ecosystem around the world's second largest crypto holder, and I am bound and determined to get to the bottom of it. And along the way, I'm going to lay the foundation for what you need to know about Grayscale and its partners so that you can track the tangled tale of debt and promises that exist. Now, before we embark on a fresh new series together that is sure to be packed with information bombs, I want to make sure that you understand the gravity of it. Because if Grayscale goes down, that's a major hit for the economic climate of crypto. Now, before we get into all of that, do something for me and make sure that you smash that like button. Make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Now, let's see if Grayscale can drag Bitcoin to 10K or under. So Grayscale Investments is a leading digital currency asset management company that is now facing an onslaught of legal inquiries from their investors and regulators. And we're absolutely going to deep dive into the controversy to find out exactly what is going on. But first, let's track what Grayscale even is. Grayscale Investments has been a respected and beloved name in the crypto space because it was one of the first to introduce a tradable Bitcoin fund that allowed institutional investors to legally hold Bitcoin-related assets. Nice. Now, many of you may not even know what a fund is, and don't worry, I assure you that I will get into that in just a few moments. First, let's talk about Grayscale Investments, the company. Founded in 2013, Grayscale has quickly established itself as a leader in the digital currency asset management space. The company's mission is to make digital currencies accessible to all investors, and it has been working to achieve this by providing a wide range of products and services that allow investors to gain exposure to the digital currency market. Grayscale offers a variety of investment products that track the performance of different digital currencies, including Bitcoin, Ethereum, and even Litecoin. Nice! These products are designed to make it easy for investors to gain exposure to the digital currency market without having to navigate the complexities of buying and managing digital currencies themselves. Even better, the company is led by its CEO, Michael Sonnenschein. And Mikey has over a decade of experience in the asset management industry. Under his leadership, Grayscale has become one of the most respected and trusted names in the digital currency space. Now, old Mikey boy has been outspoken about how the US Securities and Exchange Commission, the SEC, should allow the crypto industry to convert securities like the ones Grayscale offers into a full-fledged ETF that is directly benchmarked to the spot price of Bitcoin. There you go, Mike, fighting the good fight. And at the center of that controversy is the popular compliant Bitcoin trading instrument offered by Grayscale, which is the Grayscale Bitcoin Trust, or GBTC. Now, GBTC is a trust that is designed to track the performance of the price of Bitcoin. Now, let's go ahead and focus on what the trust even is and how trusts are different from ETFs. Watching this series without understanding this difference would be like going to a Lamborghini showroom without understanding the concept of speed. ETFs and trusts are different in terms of how they are traded, their purpose, the assets they hold, and even how they are managed. ETFs are investment vehicles that trade on stock exchanges and are designed to track a specific index or benchmark, whereas trusts are legal arrangements in which a trustee holds assets on behalf of one or more beneficiaries. In short, Grayscale's Bitcoin Trust has really stretched some financial conventions in order to be able to bring this security to market, but you can ultimately fault the SEC for making Grayscale bend over backwards to maintain compliance. And compliance is a very big part of why GBTC even exists as a trust. Certain large American financial institutions have interpreted the current opaque cryptocurrency custody laws in the US to mean that they would be in violation of the law by engaging in the process of buying and storing digital assets like Bitcoin themselves. Grayscale is the largest holder of Bitcoin in the entire world, obviously after the cryptocurrency's creator, Satoshi Nakamoto. It owns literally 643,000 plus Bitcoin, according to the Treasury's listings, the equivalent of $11.1 billion. The success of GBTC Trust has been mixed. On one hand, it has become one of the most popular and highly traded Bitcoin securities on the digital currency market, and it has provided a way for institutional investors to gain exposure to Bitcoin's price movement while still remaining compliant with the US regulators. On the other hand, the value of a single share of GBTC was supposed to mimic the price movement of Bitcoin, but has failed to do so. The reason why GBTC has lost its peg and is currently trading at a discount to Bitcoin's spot price is just the tip of the iceberg that we will be exploring in this series. And zooming out, the 75% haircut that Bitcoin has experienced over the last 11 months has created razor-tight budgets around the crypto universe. Whether that's the individual wallets of the average retail investor or all the way up to the largest holder of Bitcoin, which Grayscale functionally is. The entire crypto industry right now is fundamentally suffering from a liquidity crunch, and many institutions simply could not handle the volatility that came same with holding Bitcoin. But the 75% shed in Bitcoin arguably needed to happen because it has exposed the fraudsters like Terraform Labs, Celsius, and FTX, but also countless other small coins and NFT projects within the space. And let's be real, some of those guys caused this to happen, or at the very least aided in it. Famous investor Warren Buffett once said, "Only when the tide goes out do you discover who's been swimming naked." This applies especially well to the brand new Wild West industries, just like crypto. There have been many operators in the crypto space that have started up on big promises only to be exposed and washed away into bankruptcy, fraud convictions, or at best, irrelevance. The other part of Warren's quote is what this series will focus on. Because up until recently, Grayscale and its even bigger parent company, Digital Currency Group, or DCG, have been seen by the crypto industry to be wearing a well-secured pair of swim trunks while the tide has been nice and high. But through our exploration, we may just discover that the tide has now gone out enough for CEO Michael Sonenshine's Grayscale to be exposed as a naked swimmer that needs to vacate the beach immediately. So you better strap in now for this series, go get yourself a nice drink and some popcorn and tune in. If what my research has produced is true, then a Grayscale collapse could make the FTX collapse look like a walk in the proverbial park. And I promise you're not going to want to miss this because I'm going to unload all of this over the next 4 episodes. But today, that is all I have for you. So if you like content like this, make sure that you show up to the next series and make sure that you smash that like button. Make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.